right, good morning, good afternoon, good evening, everybody. This is Will Bridges from 123Trade. We've got a lot to talk about here today. I've got a prediction I want to share, actually quite a big trading prediction I want to share on the CAD, Canadian dollar. We've got a lot of news to catch up on from, really a lot of you probably might have felt the sting from the Aussies on Monday night. Well, I guess the Aussies, it would have been Tuesday. But generally there was a ton of movement this week. I'm expecting a lot more. The market's at a lot of critical price points on a lot of different currency crosses, and we're going to show a lot of that stuff in this session. And yes, Ray, I'm definitely going to show the pound CAD. How we doing, Verena? How we doing, Val? Deva, how we doing? Still got a lot of people kind of typing their names in, floating into the session, but we might as well go ahead and get this thing rolling. Got to cover our base. This here is a risk disclaimer. And what it says is that if you put your money into the Forex, or really any market for that matter, your capital is at risk. You have to risk it to get the biscuit, folks. No such thing as a guaranteed trade or investment. That's why you're going to see me use a stop loss on every single trade that I place. Because you got to have a plan for whether or not you win or lose. Okay, so let's go ahead and get things rolling. If you do have questions, a lot of you might be here for your first time. A lot of you are here for maybe your 50th time. But it's good to see everybody back. Please, if you have a question, then slow me down. Get my attention in the chat box. I am paying attention. Good morning, Maurice. Good to see you back. But we've got a lot to cover. I'm going to show a lot of different concepts in here. I'm going to talk about how to pick currency pairs. I'm going to talk about a lot of technical analysis. We might show some robots. We might do a lot of different things in here. So if you do have questions, silence is violence, people. Someone else might have that same question too. And, a lot of you might be, either new to this session or watching this on YouTube after we put up the recording. But what 123Trade does, so everybody understands, is we are an introducing broker service. Okay, our primary function is to help people get the best trading conditions we can in whatever country that they are in. Okay, so we're going to give a lot of guidance and mentorship. Beyond just that as well, we want to help you with mindset, equity management. We want to help you figure out how to use all this stuff. Okay, so that's really what it is. A lot of you in this session have a lot of tools. You may not know how to flick on and actually, place trades with a robot or whatever it is. Some of you may not know how to actually place a manual trade. So I'm going to show a lot of that in here. And we're going to do a lot of, analysis in this session every single week. And obviously showing up live is better because you can ask questions. You can put in requests. I've already got one request for the pound CAD. We'll get to that here in a second. But this is a lot of stuff that we used to cover in this session on this list here. Okay, placing your first trade. I'm actually going to, show a bunch of trades. I'm going to trade a live account in here today. So, you guys are going to actually get to see that. You can place trades or don't. Totally your decision. But, all these other things, verifying your account, etc., tools, demos, trading tips, all that stuff is actually on our website. If you go to 123trade.com and click on the YouTube channel page, there's a menu button at the top. Actually, I'll just pull that up and show that to you guys real quick. There's a lot on this site. I just noticed I had a developer try to make my news page prettier, and we broke the RSS feeds. So I'm going to have to fix that. But the YouTube page here is going to have, whatever it is I posted most recently. So I've been doing these macro market updates every week so that people can understand what's going on in the world and what actually drives the markets. Because a lot of people have no clue what causes something to go up or down. And it makes it really difficult to figure out what currency pair you're going to trade if you're in that situation. There's also an ebook on here if you guys want to check it out. It's on this news page. That is one thing that does still work on this news page. And really, the book itself teaches you how to do this manually without this page. But essentially, you click on this orange button here. It's a free ebook. You'd be crazy not to check it out. I'm really just trying to help you guys understand how to pick a currency pair. Okay, that's really what this is about as far as this ebook goes. I wrote this a long time ago, and I haven't really wanted to share it with anybody for, a few years, because this is a pretty big edge that I've had, and, it's done me a lot of justice, and it's generally been something that I haven't really had an opportunity to share in a way that really made sense, at least for me. But we'll go ahead and get things rolling here. I want to pull up the economic calendar here. This is on Forex Factory, and we're going to take a look and see what happened, earlier this week. We had talked about this monetary policy meeting minutes. And what the Aussies did is they came out and said that they're not going to raise interest rates anytime soon until the virus is gone. Good luck with that. So they're not going to be raising rates for a considerable period of time. They're also shut down. They're talking about ramping up bond purchasing. And what that means is they're going to start buying more of their own bonds to support the value of the Australian dollar. They did it all last year while they were locked down, and they are revisiting that, is what they said. Okay, so I may actually be kind of bullish on the Aussie dollar for that, also because we're at the bottom of a range on the Aussie New Zealand. So actually I did reverse that position on Tuesday or Wednesday this week. These core retail sales numbers in the US, this, negative 0.4%, I think everybody understands what that means. That's bearish for the dollar. End of story, pretty straightforward. Industrial production, it was up, not crazy up. It's making pretty big strides, though. The industrial production is a big deal. It may not matter quite as much in the U.S. I don't know if anybody's noticed. There's a pretty big problem happening in Afghanistan right now. And instability in the Middle East is typically not going to be good for the value of the U.S. dollar. So we'll talk more about that once we get into the charts. But this cash rate here, okay, this is really what probably messed up a lot of people on Monday, Tuesday, myself included. So I've actually got a little bit of a tweak for my strategy this week. I'm going to probably, I'll share that once we get to the charts here. But they were really anticipating to raise rates until Australia came out and said, nah, we're not going to do that for a really long time. So New Zealand can't really, force that situation unless Australia is willing to play along. Very similar to the situation we have here in the U.S. Canada can't really raise interest rates until we do here in the U.S. So, a really, really interesting situation we have right now that a lot of countries need to raise rates, but they're just not. So, really, really crazy how much inflation can happen. And really, that's what we're talking about. This 2% inflation here is less than anticipated in the UK. That came out on Wednesday. Okay, so that's still really supposed to be bullish because the expectation is that since the UK no longer has to be in lockstep with the EU, they can raise rates if they want to. They don't have to let the EU be okay with it. I mean, the UK's got a fairly large economy. I want to say 5th largest in the world. Not quite the size of the EU, but generally a strong pound is good for the UK right now because, well, they need to cut their import costs somehow, and the easiest way to do that is to increase the value of their money. Okay, so just from a strategic standpoint, I still think that's the case. The GBP has been very strong for a while, and they are, they've been on the asset purchasing that I mentioned with Australia. They've been doing that heavier than anyone else on earth, buying their own stock. That's really what they're doing. Okay, so Canada. Okay, this is our CPI numbers in Canada month over month. This 0.6% number is crazy high. I think 0.2% is the target for, 2% inflation per year, 2.5%. So we're doing about double, what we need to be doing when it comes to inflation in Canada right now. They need to raise rates, but they can't, at least it seems that way, until the U.S. decides to do that here, and we're not going to do that for another year. So, well, at least from what they've told us, they're talking about tapering off on their bond purchasing here, blah, blah, blah. May not happen. I don't think it's ever going to happen. Just my opinion. Okay, so these CPI numbers, green, people usually think, oh, yeah, that's good. Okay, but it's not necessarily the case. Okay, so what we're looking at here are much higher inflation numbers than there should be. Okay, this 3% is huge. They should be raising rates. But really what the inflation rate is, if they're not raising rates, it's the decay in the value of the money because they are printing a lot of it and incurring a lot more debt. And you could say the same thing for the U.S. Okay, crude oil inventory, this actually went down. Some people might see this as a good thing for the U.S. dollar. A lot of people might also be watching Joe Biden beg OPEC to increase their production so that we can increase this supply. Okay, and a lot of that's because we're cutting our supply from the U.S. production side. So, that number, I don't know that it's going to have a massive impact. 3.2 million, barrels is not a ton. This has been a much bigger number at other times. If you guys can see these big swings that have happened here. This big spike in supply is from last year when basically the world shut down and there was really nowhere to go with oil. It went to negative $17. So reality is that, you know, inventory has been bloated for a really long time. This really shouldn't have a massive impact, in my opinion. FOMC meeting minutes. Let's actually see what they said here. Okay. And we've got a couple of these ones that are marked with little red boxes here. These are the high impact news articles that are here. Yeah, several participants saw 2022 as a more appropriate time for beginning taper. So, you know, we had a banker come out last week in the US and say, hey, let's taper at the end of this year. In October, really, like next month after. And they're pushing that off. Okay, so that's what I would perceive as weakness for the dollar. Okay, so that is a relatively important thing to understand, that there might be weakness in the US dollar. And we've been seeing that, you know, in most of the announcements that have happened for this week. So that being said, you know, this employment change in Australia, positive. You know, they added a couple thousand jobs. Unemployment rate went way down. You know, that could be a lot of things. If we want to know what that might be, we can type in Australia economy up here. And the Google machine is going to give us a little bit better idea of what's going on in Australia. If anybody has any input that's in the session, then by all means, let me know what you think is going on down there. But Australia Central Bank ready to act if lockdowns threaten. Yeah, so basically, Australia is dedicated to the game. That's what that means. They're ready to buy bonds as much as they need to. And I can tell that just from reading this headline. I don't have to necessarily read this article. They've been talking about this for weeks. You know, it's not, and actually they did it most of last year, so it's not really a big surprise that they're going to do that. But usually, Australia historically has been pretty hands-off when it comes to monetary policy. They're very invisible hand down there. But that situation has clearly changed in the last year or so. Philly Fed Manufacturing Index. Manufacturing's down. That's another big weakness signal for the U.S. 348,000 unemployment claims. Still not good for the U.S. You know, we've got 10 million jobs open still. 10 million. Record high open jobs. So there's a lot of companies that don't have people working that we're still paying taxes for so that they can make $3,500 a month at home and not pay their rent. Okay, so things could get uglier in the U.S. Now, I'm an American. I pay taxes. And generally, I'm not excited about any of the numbers that I've talked about so far today, or really what's going on with Afghanistan or any of this stuff. Okay, so retail sales here in the UK, way down. That's bearish. I think probably a short-term thing for the UK. The reason why I'm not overly concerned about retail sales in the UK is because the Bank of England is constantly expanding their balance sheet, and they're taking more of an approach like, hey, populace, if you're not going to spend money, we'll do it for you. Okay, so I don't anticipate that to stop. Okay, they very much seems like the government's just going to pick up the slack in gross domestic product with government spending. Okay, so I'm still going to be bullish on the pound. I think it's actually at some high prices right now, so it may be, you know, short-term bearish with news like this. But I think the government is working on making sure that it's long-term bullish. Core retail sales in Canada, this is a really positive number. And if we look at this here, you know, good news came out. Last time we got some good news, we had a decline the following month. All those sales already happened. Okay, so the future trend, which is what I care about, I'm thinking short on the CAD, and I'm going to show you guys why. I'm actually going to pull up the index. Okay, here comes the Smart Trader charts. Let's get to the actual CADX. This is the CAD index. And I think this one's going to be real interesting, to say the least. Okay, so let's come down to our monthly chart. Look at all of the information we can. We've got 5 years of data on the index. Okay, so what I'm looking at here, okay, is that we are at somewhat of this high price up here. I'm going to go ahead and just draw a box. Okay, and most of the world has been in a range for the last 5 years. So right now, if we're towards the top, now I'm going to expect to work towards the bottom. Okay, and if we come down to a lower time frame, let's come down to our week. And this is the index. So there's a lot of movement that's possible here. We've got a very strong downplay that happened, you know, for the last several weeks. Really, this week it's been falling kind of like a brick. And, you know, what I'm expecting is for this to continue to fall for a decent amount of time. And let's actually get a couple of trend lines on here. There's two styles of trading out there, trend and range. Okay, we haven't tested that trend line. I would be very surprised if we don't break through that and get into our lower ranges that we've experienced, because we've already kind of broken these highs that are over here. And this is what I would call somewhat of a pivot point. If you guys are familiar with pivot points, okay, at this level. Okay, so we broke through that. That's really a bearish signal that we broke through that. We're on our way to break through it again. Okay, so we're kind of testing right now with authority. I don't know if you guys can see this big, bearish hammer that's happening from this week. But if the market closes like that, I'm going to be a bear next week and for a very long time on this CAD index. Okay, so I think this can come down a lot farther, down into our little demand zone that's all the way down here. This isn't what I'm going to trade. I'm just showing you guys more or less how I'm going to decide what currency pairs I want to. Yeah, I think so, Ray. But we're going to go look at I'm going to have to look at each of these currency pairs before I just make a decision, obviously. But I think that the market can get all the way down there. Okay, that's a very long ways away. It's 300 pips on the index. So that's roughly 600 pips per currency pair. Some of them a lot more, and I think there could be an incredible amount of movement on a handful of pairs. Okay, one of those that I'm very excited about is this pound CAD. And I think Ray had asked me for this one this morning. Looks pretty bullish to me for the last several weeks. Okay, we are at a little bit of a high price right now. Let's come to our monthly time frame and get a good look at this thing. Clear out everything that's on here. Crunch this thing down. I want the whole world in my hands. Okay. Make this as easy for myself to know what the long-term trend may be doing as possible. And the last time we went super sideways like we have for the last year or so, do you guys see this over here? Go ahead and draw this little rectangle. We broke out up big time. Okay, and now we've got a slightly higher range right here. Okay, that went for even longer. So I think that our next big run might be even bigger than this one. Okay, so this could be our next big run right here. Okay, so I'm just going to copy that box. I'm going to pull it over here. I'm going to do the same thing. I'm going to go from the bottom of this box. Okay, so I really think that that's really where this could be headed. And interesting thing enough about that is that it kind of lines up pretty well with this price pocket we've got right in here. And I'll draw this little M here. Okay, this is what I'm talking about with price pocket. There's an M there. Okay, that's really what I'm looking for, and I'm looking to kind of intersect with the point in the middle of our M. So let's go ahead and get a line there. Okay, a little bit higher than maybe we're going. Actually, we've got some turnarounds on this crown that happened right there. Okay, so I wouldn't be surprised at all if we continue to make that move. Okay, that's really what I'm looking for. So that doesn't necessarily mean buy right now. It kind of just means that I'm going to be bullish until we get at least there. Okay, so, and really, if I want to aim lower, our current market, just to be more conservative, okay, this is our most dominant range, in my opinion, right here. That's really the next high we haven't hit. Okay, that's really where I'm expecting this to go first, maybe take a little bit of a breather, but that's in and of itself tons of pips. Okay, it's moving like a rocket right now. And if we come down to our, say, 1 day chart, just work our way down here a little bit. We just made a fresh high. We just broke these two over here on the left. You guys can see this here. Okay, so I'm going to be bullish on this because we've got a high. Here's a higher one we just made today. So I'm continually bullish. Okay, I just need to figure out where do I want to get in. Okay, and that really comes down to where can I manage my risk. Because if I can't manage my risk, it doesn't matter what I think at all. Who cares? Okay, so the auto fib tool really looks like it might be a little confusing on this one. Let's zoom in here a little bit. Okay, but it does look like we came down, we hit our extension, we actually broke this level. Let's pull another one. Let's pull another one right here. Okay, came down to our 618. This could be our extension level above here. Okay, no gospel in the world. No reason why that can't be our extension. There's lots of big turnarounds that happened at this price before, if you guys can see these over here. But the market seems to like to turn around at that price. Seems to like to get up there and touch it. Okay, so if nothing else, that price is popular for some reason. Okay, so I think that we get back there. Okay, if you guys can see that, it's hit it many times. Okay, that's kind of the point of no return. If we pass that line and we create a new low above it, I'm going to be bullish as all get out on this thing until we get to the top of this box, which is, hundreds and hundreds of more pips. Okay, we're about 1,000 pips away from the top of this box. Okay, so this is a pretty big call that we're making right now. Okay, and I don't see any reason why we can't do it. Okay, so let's come down to maybe our 4-hour time frame. Get a closer look at what's going on right now. Okay, so maybe pull another fib range. Just want to know where all the important ranges might be. That's why this ABCD tool is awesome, because you can literally just kind of pull as many of these as you want. We kind of already hit our extension here. This seems like more of a situation that I may want to use some sort of a range range strategy, or maybe I just draw these manually. Let's try this manually, okay? Because we've got a really choppy market here on this pound CAD, and I'm just not a big fan of all these willy-nilly Fibonacci ranges here. So I'm going to go ahead and just work my way up this thing manually. Okay, so here's our first wave. Okay, and see where we hit our extension right over here. I'm going to go ahead and draw my next wave. And that looks like we came right there. Okay, and we hit our extension. Market fell. Hit the 618 down here is what it looks like. So let's get our next wave. Okay. Let's get our next wave. This is our low. Our extension up here actually really should come all the way to... Oh, hold on here. Undo. Got a little turnaround here. Here we go. That's what I'm looking for. Right there. Okay. You guys can see what I'm looking at. Still aiming at kind of the same level. That's really where our extension might be. Okay, it might be going there right now. Reality of the situation is it's kind of bouncing off this blue level here that was also a Fibonacci extension before. I'll just go ahead and draw a line there. Okay, so here comes my line. We'll make this one blue. Okay, that might be our entry point. Thing is that I need to figure out where I can manage my risk, because, end of the day, I'm not interested in getting in this if I already missed the opportunity to protect myself and get in the trade. So let's come down to slightly lower time frame. Could come down a little bit more as well. Okay, so there might be a slightly better entry point that happens, maybe down here at 175, 50 pips lower or so. But the truth of the matter is I need to figure out where we've had a low in the past that I could use to protect myself, and there's one right here. Okay, I might make this line red, get a little perspective on here. Okay, not necessarily, the best risk-reward ratio, but solid. My opinion. Okay, let's move actually up this blue line. Let's get this to our current market price so we can be a little bit more precise here. Let's measure our risk. Okay, so to our previous low down here, we're talking about 113 pips, and we're trying to capture, 135. Okay, so I'm not a huge fan of that risk-reward ratio. There could be an opportunity for me to get in at a lower price, and that might actually be the strategy that I would prefer to take. And for a lot of reasons, let's go ahead and get a smart support on here, so we can see where those lines are. We've only got one really where I'm looking. Okay, so that said, if I'm going to be right there, I might as well be right here. Okay, so I could trim that up a little bit. Or my other option is that I get under this further S2 level, okay, and I try to enter somewhere down here, which my opinion might actually be the preferable way to go about this, because I can have 2 levels of support to protect myself. Only going to get in if I get a better price. We're kind of at a higher one right now. And the easiest way to negotiate with the market is to just not do anything. Yeah, Ray, I tried to use the auto fib tool on this one. But generally it was, this trend has broken a couple of different times because it's been so sideways. So I decided to do this manually, and that's really how we ended up with what we've got right now. But really, okay, so the difference between the trade that we could get into right now and this one is that this is now an 87 pip risk, so a smaller risk, maybe 90 pips. And now we're looking for, a lot more on the top side, 193. And really, if we want to be more conservative, play along with our Fibonacci range that's here instead of my other range that I got. I always like to lean towards the strategy that's more conservative in every situation. Okay, but that's really what we're looking at. So about a 90 pip risk, we're going to try to capture something like 65 pips. Sounds like fun to me. Let's go ahead and set up this pending opportunity here. Okay, so I'm gonna click on pending. This is a pending buy, and I'm looking to do it at 175.122. Okay, stop. We're just going to say 90 pips. And this was 165 on the top side. Okay, so Smart Gauge is telling me bullish, not surprising. But we're going to go ahead and click place. And I think this thing's got some serious legs if we get into this thing. It'd be really nice. If we don't get into this trade, then who cares? That's the cool part about pending orders, is you either get in at a great place or you don't get in at all. So let's go find some other stuff. Okay, another thing that I think might be hot. Okay, if we're going to talk about all the unrest that's in this world and how terrible, we just talked about how terrible the US is doing. That's usually going to be good for places like the Japanese yen. Okay, so we go to the USDJPY. You guys are killing me with the jokes in here. But you guys can see I've already entered this a few different times, I think in a couple of different accounts. I'm going to hide all the ones I've got on here already, so that we don't get confused. And we'll come up to our high time frame, get a good idea of what we're looking at. Okay, crunch this down. I want the whole world in my hands. And the dollar yen is very much a place where, you know, if there's big risk in markets, then the dollar yen is typically going to fall. And that can be very easily noticed here by this dark cloud cover formation that formed with the last two monthly candles here. So this is a big signal right here. Without looking at anything else, that's a big signal that this thing might be coming down right there. Okay, for a considerable period of time. You know, it's right at the top of this range as well. If you guys can see the range that I'm talking about, we've got this here. Okay, more or less. The thing about trading, trend lines, all this stuff, nothing is really an exact science. Okay, that's the part that people don't understand. Okay, this is more or less the range that we're living in. It's been kind of downward biased anyways. So that said, okay, there's a lot of room down here below. If you guys can see, you know, the dollar yen has been all the way down here in the 76, 75 range before, and actually twice. Okay, this was back when we were recovering from, well, the last crash. So here's the 2008. You know, we printed a couple $100 billion while I was in school, and you know, that being said, I think that same sort of move can happen again. This could be a big downfall on the US dollar, and we could be right at the top of it right now. The other reason why I think this might be possible is because we do have somewhat of a crown formation up here. Gann vibration, lots of different patterns that people would call this sort of thing. But there's, I think, a good chance that this market could even get all the way down, you know, to this previous range. We haven't touched this previous range in a little while here. So I think that a short-term goal for me, okay, might be just to aim to the top of that range, because this is really something that, you know, has been a hot stove. I drew this box right here for a reason, okay, and it's just because I saw this level, okay, that one seems to be important, okay, when we break into it, out of it, whatever, okay, it seems like the market likes that price. Also happens to be very close to the middle in the average. I don't know if anybody has ever heard, you know, everything regresses towards the mean. Okay, that's really what I'm kind of banking on in this situation, is that this is going to regress towards the average. And if you guys notice, there's a lot of prices up top, not a whole lot of them down bottom. We're very top heavy in this market. Okay, so these prices down here have been paid for, you know, months, years at a time in this green box I've got. I think we're coming back down there. Okay, so I may just aim to the top of this box. And that might be where I want to stop being a seller. That's 500-600 pips away. 650 pips away, something like that. Okay, so let's come down to our week. Okay, and right now, literally right now, we're at kind of a high price. Okay, I'll draw a little blue line here, so we can get some perspective for how far away our target is, and maybe we aim a little bit higher than our target because we've actually got more higher lows. Oop, hold on, didn't mean to do that. Got an extra line here. We're gonna make this one our stop loss. But I may just pull this up here so I can incorporate these turnarounds that happened at the slightly higher price. And when I'm talking about these, okay, this is what I'm talking about. I want to be more conservative at every possible turn. Okay, so I don't want to try to aim for this extra 200 pips if the market may not get there, because it might not. Okay, so what I want to do is I want to get out of the place where I can get what I think might be the most profit possible. Lots of turnarounds, popular price. Okay, this might actually be the buy zone between my green line and this, light green box below, but we won't really find that out until we get to that point. Okay, so, and things can change quickly, but I want to show you guys more evidence that I might want to be selling this thing. Okay, so I'm going to come down here, and what we're looking at, we've got our uptrend line here. Everybody likes uptrends. There's a broken one. Okay, and we've actually already made lower highs on the right side of our trend line, right here. Okay, so this is what I'm talking about. That's a lower high than that one. Okay, so what that means to me is that we might actually be in downtrend territory now, and it's probably a great time for me to look for places to sell this thing. I already have. Okay, just so everybody's on the same page, I already did that. We already broke out of this fib range that's here, and really our closest target. Okay, so now I've shown you guys where my long-term expectations might be, but that doesn't necessarily matter for this week, for the swing trade that I want to make. Okay, so that might be the level I want right there, where my extension is. Okay, because the market may bounce, turn around, you never know. There may be another opportunity to sell it again after we get there. That's still, 150 pips away, something like that. So let's come down to our 4 hour and figure out where I can protect my risk. Because that's really what I need now, is I need somewhere where I can manage a potential loss. Because as smart as I think I am, there's been a lot of trades that I thought I should have won that I didn't win. Okay, so that's why you want to trade at the stop every time, because I don't ever want to risk my entire trading account on one stupid idea, because I'll have more of them next week. If there's anything that I can promise, if I'm alive and I'm looking at charts, I'm going to have more trading ideas. So, if I know that, I don't want to risk my entire account. We've got a very, very bearish candle that happened right here. Okay, that's a bearish engulfing candle. Okay, this thing, in my opinion, is ready to move down. If you haven't already got in this one, I'm already in this one, I think. I'm up 0.2 pips. I think I got in this one last night. Yeah, you gotta stop thinking. That's the problem. Come on, Ray. That is not the problem. Okay, thinking. There is such a thing as thinking too much. But even if we come down here, we look for another counter trend line break. We've got one right here on the lower time frame as well. So if you guys are into trading patterns and trend line breaks, which I think most people are, show how to determine the lot size. Yeah, absolutely. Yeah, I can pull up the Excel spreadsheet that I've got for that also, just to show you guys. But right now, okay, so we're up 0.4 pips. Now, I could load into this one again more if I want to, but realistically speaking, you guys all need to see the same thing. You guys all want to know. Let me actually just pull this up from the bottom here. Equity management calculator. Excel is opening. It's gonna happen. I might as well measure how many pips we're talking about here first. Okay, so I actually added a little bit of money to this account. We're gonna grow this thing slowly. Yeah, Steve, if you email me and you want to get a copy, I will send it to you. It's an Excel file. There's really no other way for me to deliver it that I've set up yet, at least. That being said. But yeah, so we need to know how many pips that we're risking. First of all. Okay, so here it is. We're looking for, a risk of 50 pips. Very small in my opinion. Okay, to try to capture, 140 or so. Okay, so risk reward's great. Okay, so thing that I need to understand is lot size. Okay, so currently there's $735 in this account. Okay, so if I have $735, I'm going to type that number in. Okay, 50 pips at risk. Okay, so if I want to risk, 1% of my account, okay, I would need to trade a micro lot, one singular micro lot. Okay, if I want to risk 2% of my account, then I would need to trade, 3 micro lots, which frankly is not something that most people should do. Okay, so reality is you want to aim towards 1%. Okay, that's why this is green. In this case, green is good, because if you're risking 5% per trade, you have 5 trades open, you've got 25% of your butt on the line right now. And frankly, that's going to be very stressful for you all the time. No matter how big your account is, because if you lose 15 bucks, and you've got a $500 account, that's 3%. Oh my gosh. People are very, emotional with the percentages in their account. So you need to be cognizant of that fact. Okay. And, generally people just like to win. Okay? So now that I know I pretty much need to do a 0.015, I can probably have 2 trades open here. It's up to me. If I want to enter this again, okay, just to show you guys, since I'm already in this trade, I might actually pull this stop loss up above here, and I might actually look to enter pending at this higher price. So if the market does dig against me and test this higher level, I'm going to get in as a seller again with a ridiculously better risk-reward ratio than I got on my first trade that we're pretty much flat on. As far as the Fibonacci, if you're talking about this most recent wave, it's not really an appropriate place to pull one, in my opinion. Really, the day chart has the most applicable Fibonacci range in just my opinion here. Okay, so that's really what I'm looking at. And we're very much, already broke out, haven't made it to our extension level below here. That's really what I'm looking for. And that's why we're aiming at this 108.2 level that's below here. Because if the world sees more downturn, if we have another dark winter like Joe Biden rung in for us last year, at least what he called all of last year, and it happened. We're going to go through a dark winter. Maybe we will. Okay, so I'll take their word for it this time, especially since we've got every reason in the world technically to do that. Okay, so it's not just about what I think, it's also about what the technicals are telling us and if I can manage my risk. Okay, so I'm already in this. Okay, I'm going to go ahead and set up a pending order. If this thing does dig on me, I want to get in the better position. Okay, so this is a pending, pending sell. Put a 0.01 here. Go ahead and pick my price, 110.2. Okay, pips at risk. I think this was 50, if I'm not mistaken. At this price above, see 62 pips, I guess, for 196 on the bottom. So we'll say 62. Maybe make it around 65. So I'm going to risk $6 or so on this trade. Not a huge deal in my opinion. I don't care. It's actually less than the cost of lunch. So to do that, get 165 pips, maybe make 15, 16 bucks. Sounds great. Place. Okay. And what I may do, we've been up tons of pips every Monday. If I show up on Monday and all of my beat the market trades are up, I'm probably just going to dump all of them and play the game again next week. Because that's really what I should have done this week. Otherwise, I wouldn't have got jacked up by the Aussie dollar and the NZD, just like a lot of you might have. Okay, so I'm going to take what the market gives me. Conditions are a little bit different than normal because there's a heck of a lot of risk in every major economy. Australia shut down. New Zealand shut down. They're trying to shut us down here in the U.S. Europe's, pushing everybody through the vaccine passport thing, and that seems to be getting a decent amount of pushback. Not to mention vaccine passports are going to slow down the economy anyways because people that aren't vaccinated can't spend as much money. So, and businesses are going to get hurt by that as well because there's a lot of people that, they just can't do business with because they haven't had a jab yet. Okay, so all of those things said, there's, a lot of reasons for me to believe that this thing can come down a heck of a lot more. We hit our 618 level right above here, so we're in line, in my opinion, to come down here and hit our 618 below. So I'm going to go ahead and click on this place button. Okie dokie. I'm already in short. So, if the market does come up higher, then that would be great. Otherwise, if, you want to be a little bit more aggressive, you could always just get in, do something like that. Okay. So a couple of different options here. Just want to make sure everybody understands there is no one way to eat a Reese's or place a trade. But let's go to another pair I think might be hot. And New Zealand, even though they didn't raise interest rates, still has a very healthy economy. Okay, so they may be short-term bearish, maybe not. Looks like they've been pretty bullish against the CAD, and I think this might be one of the sexiest ones on the chart. Let's clear all this stuff out, and actually this is part of the prediction I was making. I'll redo all this stuff. Okay, so if we look at this right now, okay, and on this highest time frame, it doesn't look like a lot, but this is 14 years of information. So if we're looking at 14 years of data, I'm going to figure out where the market picks up, leaves, turns around. The divorce points where people just have this red line. Okay, and that's the range I think we're in. Okay, and I have no reason to believe we're not. Okay, so there's a couple of different ways that people may look at this. I might just pull this quick auto fib tool from the bottom. Okay, we came down all the way to our green level below. Okay, so what that means is that we had a lot of fear down here also. That's a big wick. This is a big spinning top push is what this candle is called here. Okay, so I think we can get up to our green level above. It's not going to be fast, not going to be instant, but that's actually all the way up here. It's not going to. It's definitely something. This currency pair typically moves a little slower than others because they're both commodity-based currencies. But that said, nothing's stopping us taking a look at this thing and seeing where this thing could go long term. Okay, this is another fairly large call. Okay, if we want to have our stop loss outside of this range down here, we could really do that if you wanted to take this position trade. And this would be something you might level into a bunch of times if you're going to have a 900 pip stop loss. Majority of traders in this room, not going to take a 900 pip stop loss. Really wouldn't recommend doing that. At least I'm not going to do it. So you guys do whatever you want. But 900 pip stop loss is a little bigger than I would want. Really the biggest I like to do is probably somewhere around 500. Okay, so some people might do something like that. Okay, and move up, get into the 600-700 pip range. And then there's more aggressive people, might also include me. Let's come down to our weekly time frame, that are going to see something like this here. Okay, we've got this counter trend. This thing's been moving up. Okay, and we broke it. We backside tested. Looks like we're in the buy zone right now. This company's called 123Trade, and this is a 123 right here. Okay, 1, 2. Okay, this is our 3 that we're looking for. Okay, so I don't necessarily need to try to take this all the way to the moon, which would be all the way up here at this parity price. Okay, that's really a very aggressive call to get out of this parity level up above. Okay, so that's at $9.99 at $1. So if this gets totally even, and I think it could, that's a 1,200 pip move. Okay, and I think it could actually go a lot further than that, but I don't necessarily need to go that far. Okay, that's the part to understand, is that this isn't really going to have a bearing on the swing trade that I make, maybe next week, because this is still a weekly chart we're looking at. Let's come down to the day. Okay, we're very sideways on the day chart. Okay, and now we're looking at this. I've got a few lows here. I can whittle my way down even more. I've got a couple big turnarounds here. You guys see that? Okay, so if the market goes below that, then I'm probably not going to want to be a buyer, at least for a little bit. So I'll happily lose this trade, okay, if we hit this 85 level. Okay, so that's still 300 pips away. And, we've got every reason to believe New Zealand's bullish. Their debt to GDP ratio is solid. Canada's kind of doubled their debt to GDP ratio in the last couple of years, probably by more than that at this point. And actually, they've done that by more than any other country on Earth in the last year. Okay, so all those things noted. Okay, I might want to see where our supply and demand actually intersect, and I might be able to use this line here. Okay, and just look for this intersect level. Okay, also happens to be at kind of the top of this little darker yellow level here. Let's go ahead and just draw a green line there. Just looking for an exit. Okay, and there's a lot of strategies that you could use to find an exit, but that's where our intersect is. That would be a sideways trade. Not crazy surprising for something like that to happen if it does. Okay, so maybe we tighten up our stop loss a little bit here on the bottom of our yellow green line. These two zones, I'll get right outside of my yellow zone. So if we get into the yellow, I'm out, I lose, and that's okay with me. That's what I want to happen if it goes down there. Okay, otherwise I want to aim at this 91 level above. It's a few hundred pips away. Okay, so let's come down to our 4 hour, get an even closer look. See if maybe we can be even more cheapskates on this trade and get in at an even better price. Okay, it does look like it might be taking a little bit of a break for the time being. For the last 8 hours, we've been falling. Okay, so this may not be the minute that it decides to turn around. You know, a lot of people love to be in front of the computer at the perfect time, but you know, unfortunately, that doesn't usually happen. Okay, so what you're going to be looking for are places that, you know, might be a slightly lower price. We're falling down here. Has the market turned here before? That's really what people need to understand. Has the market turned at this price we're at right now before? The truth is that it has. Okay, it's also turned at lower prices. Okay, so that being said, if I like the risk reward here, I don't necessarily even need to be this far down. I could be a little bit higher. I could even try to be up here. Okay, so that's still 100 or so pips. We've very much narrowed down our risk at this point. So kind of makes it a situation where I can get in once, maybe twice if I want to, especially since I added more funds to this account. So this is 130 pips now versus the 700, 800, 900 pip stop losses I showed before, which most people aren't going to deal with. Okay, so this is going to be a risk if I place this trade right now, if I get in right now, of 130 pips. Okay, and I may just do that and plan to get in again if it falls 50, 60 pips below. I'm going to buy it again. Okay, but that's a decision really for next week, if I want to do that. But let's come down to our 4 hour one more time. Just make sure that we're happy with this entry point, because we are testing these highs that happened over here on the left. And there's a good shot that this thing could shoot up and come up a lot. Could also come down to this lower level. When I'm talking about this lower level, I'm talking about right here. Okay, that could be where the best place to get in is. Okay, it's falling right now. And if I want to get a better idea of that, I'm going to dump all this stuff that I've drawn on here. Okay, let's maybe draw a fib on this most recent range. Oop, that didn't quite give me what I wanted. Let's get a little bit more precise on this thing. We did hit our extension. Okay, so I may want to get in at the top of this little AB boundary right here. So just to make this a little more simple, we got a bunch of garbage off this chart. And actually, that might actually be our new wave that I can draw. I'll just do this one manually here. Okay, so this might actually be what I want to pay attention to right here. Okay, so we're not quite down to our 618 level, okay, on this most recent range that's here. So, if I want to wait until that happens, down here, I'll make this line blue. This might be where I enter. It seems like we're making a skydive to it right now. Then I could put my risk outside of my most recent boundary, below my former C price, and I can try to aim towards this high that happened above. Patience is the virtue, people. And you could enter right now if you wanted to. You can still have a pretty good risk-reward ratio right there. But, it doesn't really look like we're at, a level the market wants to turn around at. The 5.0 level, my experience, not super popular. 618 is, really the golden ratio that everybody looks for. So I'm going to follow along with that, whole theory that the 618 is the best place to get in. And I'm going to go ahead and set another pending order. Okay, and I set a pending buy this time. I need to pick my price. Okay, so 0.8774. Oop, a couple extra digits on here. And my stop, let's go ahead and measure, see what we got. 35 pips, super narrow. Try to capture 92, say 40, and we'll say 90, okay? So I'm going to set that pending order, place, okie dokie. So I'm not in that trade yet. I'm waiting until it gets to the price that I want to be in this trade, because right now, I think I can be a little stingier on this thing and get a better entry. Okay, so let's come to our next currency cross of interest. Okay, and there's Canada is going to go through a little bit of pain. Okay, so everybody kind of knows that, because, well, the reality is that if you really increase regulations, you keep people from buying things as much, you increase your debt like crazy, there's going to be issues. So let's come to our CADJPY. It's really the next one I want to look at. Actually, the CAD Swiss is another fun one. Actually, this CAD Swiss, we may come to this one first. Wow. What a bearish move. Okay, and we'll look at the long-term trend on this thing first. I'm going to be considerably bearish on this one for all the reasons that everybody has been for the last, 16 years. Okay, because if I look at this here, I've actually got a true high on this monthly time frame all the way over here. Okay, that's a true high. I've got 2 to the right, 2 to the left of this high that I just drew that to. The other interesting thing is that we've broken some pretty serious lows. This thing could come down a lot. Okay, so if we want to get a fib range on this and just see where we are in the waves, okay, we are very much, we tested our little high here. We haven't really hit our extension below. This is telling me this could come crazy lower. I'm not going to aim that far. Okay, this is where I think this thing might get tired and not really, let's just say this is when I think some bank intervention might happen, either from the Swiss side or the Canadian side, either one. Somebody might make a big move there. Okay, they may do it lower, who knows? Regardless, that's what it looks like we're headed towards right now. We are testing our range right now. Let's come down to our weekly. Okay, so if you guys can see this is the same range. Okay, we are testing the edge of it. So what I am expecting is for us to come up a little bit and, potentially give us a big, strong opportunity to the downside, because we've got, a lower high here. That's why we've got 2 fib ranges. Maybe this thing comes up to my AB boundary and then it comes down and tests this lower level. Okay, so I'm not really in a situation where I think, maybe let's come down to the daily. Let's pull another fib level here. Okay, so really don't think that we are at a point that this thing is done coming down. I think this is really our next target right here. This is really where I would be looking to, rip the tape on life and stop messing around, because there's a ton of prices. The market spent days, weeks, months in this range. Okay, right down here. This is a big, demand zone. Okay, so could be a place where there becomes a lot of intervention from the bank because they don't want it to go any lower. Okay, so I don't really want to try to trade it further than that, even though I think it could break out. But I would basically be expecting some kind of a catastrophic event. And, frankly, I don't like to plan my trading around catastrophic events that haven't happened yet. Okay, so all of those things said, okay, I want to figure out where I can get in this thing. I think the edge of my boundary is probably a good price because we're at a low price right now. And I'm not into chasing trends. This is what I think the trend direction is. So if that's where I think the trend direction is, now I need to figure out where I can put my stop loss. Maybe let's go ahead and throw on some smart resistance levels here. See where all of those are. And this is the day chart. So this is a fairly, let's just say this one's kind of too far away. This trade's not going to work for me if I can't get any closer than that with my red line. Okay, so let's come down to maybe our 4-hour time frame. And we've got another closer resistance level right here. Okay, so the risk reward on this trade actually makes more sense. Okay, this is actually a takeable trade, at this level. Below, if I decide to have my stop loss a whole lot higher than that, really doesn't make sense. But we are kind of climbing towards my blue line right now. Some people might be crazy, aggressive and try to get this 30, 40 pips that's there. That's not really my style. I think the CAD's going to fall like a rock for a long time. It's been very aggressive. This is a falling knife. Okay, so what I want to do is I want that falling knife to bounce a little bit and then fall some more like a knife. I don't really want to try to go against the grain on this thing because why? A lot of people want to see me place live trades in here every week. And, I like to do that if the opportunity makes sense. But generally, that's just not how life works. Okay, so I don't know how else to put it. But this is what I'm going to plan to do. I'm going to be conservative. 0.71695. And I'm going to negotiate with the market to get a better price. And just like most negotiations, you really just have to wait to get a better price. 115, 205, so just say 115, 200 maybe. About an $11 risk with a 0.01 should we get into this trade. But now, if it gets to the price I want with a risk reward ratio that I like in the trend direction that I also believe is happening, then I'm going to get in. If it doesn't do that, then I'm going to miss this trade and I'll trade something else later because it doesn't make sense to take an unnecessary risk. Is just as simple as I can put it. So what I need to do now, move on. Check out this CADJPY. Looks like a very similar situation here. Not quite as bearish long term, so I won't be as aggressive in this situation, especially considering that, this is kind of our long-term trend line here. Okay, we just kind of tried to get out of that, and we're very quickly not getting out of that. So if that's said, let's go ahead and get another line on the bottom here. See what we're looking at. Okay, this is somewhat of a falling wedge, or maybe not a falling wedge, this is really just a wedge. Okay, so if I'm looking at this like a wedge, I could probably aim this down to the 76 range. That's 800, 900 pips away. Okay, not everybody's going to do that. I don't think it makes sense for most people to do that if we're going to be forthright about that sort of thing. So I want to whittle this down. I want to find a smaller opportunity inside the bigger one. Okay, and what we're looking at here, okay, this market just made a lower low this week. Okay, it's been making lower lows. Just to show you guys trend direction, what's been happening here for the last several weeks. And I never like to call the top, call the bottom. I like to follow the trend. Okay, because this market does that a lot. It trends. Okay, so there's a lower high, here's an even lower high, here's a low, here's a lower one, and here's a lower one we just made this week. Okay, so I think this thing can come down a heck of a lot more. It may make a high somewhere over here before it does that. So if I'm looking at this like, hey, I want to sell this, but we're already at a low price, it fell all week, it's probably not the best time in the world to get in as a seller if I already missed this 200 pip move that happened this week. Okay, so markets have a tendency to average themselves out, at least in the short run, long run, or really mid run, all of them. Okay, so I need to be cognizant of that fact and not chase this trade, because the bottom line is I don't have to. Yeah, I can trade whatever I want. There's going to be more opportunities. Okay. Oh, that didn't quite give me what I needed there. Let's back that up. Try this one more time. And I guess we hit our extension, which basically tells me we might be able to trade back to our 382. I might actually be able to go long on this one in the short term. But we'll find that out here in a second. I only really would want to take this to my 382. Okay, so here's my range. We're already at the 236. My 382 is right there. I'm not super interested, okay? Because we're not talking about a lot of pips here. Although this is the day chart, we might as well measure, see what we got. Our 382 is 78 pips. I may actually try to take that, because we did hit our extension. We got a big wick on this candle. Maybe that's it. Let's go ahead and measure this out. Let's see what we got. This could be a good opportunity. I could do a short-term buy, set myself up for a pending sell as well while we're here. And my short-term buy, I can really only come that far. Okay, and my risk, I need to figure out where that is. Let's come down to 2 hours. Okay, and if I want to be this cavalier, let's figure out where our support levels are. Far away, what it looks like to me. Oh, looks like we've got one right here. Let's make this red. Okay, here's S1. Okay, so if that's my trade, that's my trade. I'm going to go ahead right now. I'm going to enter this thing. This is not a big risk, not a big reward either. 50 pip risk, 78 pip opportunity. I like it. 50. Say 75 here, so about a 1 to 1.5 on this trade. Let's click buy. Okay. Now I'm in. Okay, so I'm trading against the trend on this right now. So what I want to do now is I want to figure out where I should be going next. Okay, so I'm going to get rid of my smart support levels here, because if I win this trade, I want to get in as a seller too. I'm more excited about the sell opportunity. That's all the way up here. Okay, so my risk reward on this sell opportunity could be much bigger than what our little scalp trade that I just showed there might actually produce. Okay, so this could be my longer term opportunity. May not come quite as high, who knows? We're already in this trade though, so I'm long for the time being, and I'm looking to sell if we get back up to this higher level. And really, Wouldn't take a whole lot for it to do that. If we test this trend line here above anytime in the next, well, before the 10th. So we got 2 weeks for this thing to make it up to that price. Very well could do that. So since we've already bought, I'm going to go ahead and set my pending sell for this 87 price. Stop loss 80 at let's see how many pips this is. Okay, talking about 139, so about a $13 risk from a micro lot position. You know, 476 pip opportunity on the low side there. This thing typically moves like a rocket. All that stuff could happen pretty quick. We could potentially win this trade, lose this trade that I open now before the day is over today. It could take a week for it to do it. There's really no way to know. But the cool part about Forex is that you don't have to. This isn't options. I don't have to know what day necessarily something's going to fall or rise or do anything. I just have to manage my risk and make sure that I will take care of myself. Okay, so let's go ahead and set our pending order here. Place. Okay. So now I'm gonna trade this thing towards my 382 level, and I'm gonna get out, and then I'm gonna try to sell it and go the other direction. So the fun part about trading is you can do both directions in the Forex, so you can make money either way. Doesn't matter up or down. I know a lot of people that are new have trouble grasping that, but really, you know, it's something. It's pretty straightforward. You're either if you're looking at the CAD yen right now, if I want to go long, I'm buying the CAD with yen. If I go short, I'm buying the yen with CAD. That's really all that's happening. Okay, so a lot of people get confused by that, but that is why you can trade either direction. And I'm getting a request here from Phil. You want to see silver, Phil? We can talk about silver. Well, XAGUSD. And this one, okay, is interesting to say the least, okay, because it has been very, very bearish lately. And that could continue. Not because it should, but because the market's manipulated. Okay, just like every other market, all of them are. The minute you realize that they're all manipulated, the minute you might start trying to think like a banker. Okay, so right now, if we look at this thing, just long term, our trend is up. Okay, as you might expect for something like a metal. Okay, so this thing could be very bearish. Okay, just my opinion. We are at the bottom of a range. Okay, but if I come down to my, well, let's just say we've got this trend here as well. This was the downstroke. And then we had our sideways range that happened, and I want to make sure everybody understands what the structure of this market has been for quite some time. Okay, this is really the range we lived in, that green box, all the way from back here in, well, we got into it for the first time all the way back in 2013. We didn't bust out of it until 2020. So we spent 7 years at that level. So if there's anywhere that I think might be a great place to buy it, probably down here. Okay, probably down there. Okay, so that's really where I would want to look. So if it tries to get back in this range, it might be a hot stove type of situation, which is something that I would want to be ready for. I can't place this trade in my account here. Base currency here is US dollars. So how does posted price on currency work? I'm not sure what you mean by that, Terry. But if you're in a pound-based account, then your price levels are going to be slightly different on a commodity like this. But the levels are going to be, very much the same. It's just measured with a different stick. It's the difference between metric and whatever we're using here. So let's come down. Okay, I'm going to draw a quick horizontal line here. This is where I think, might be the best place to buy silver, is all the way down here at 21. Maybe actually a little bit lower. Let's come down to our daily. Just mark these highs here. So if we touch this level here, 21.5, I think that's a fantastic place to buy, at least in the short run. The reason why I wouldn't be crazy excited to buy this yet is because really that's our trend line right there. Okay, and this has been making lower highs. You guys see this here. This is our $32 that happened. Okay, here's our lower high that happened. Here's a lower high that happened. Here's another lower high that happened. And we're moving down for the last 4 or 5 days. So I'm not going to call the bottom on this thing anytime soon. but a $2 dip is a pretty far way down. I may actually look to sell that, but the only reason I may stay out of this one until it gets lower is because I do think that the USD is going to be bearish. This could be very sideways and very choppy. If you don't have a lot of money in your trading account, you probably shouldn't trade this. Yeah, Imperial, Carrie, that was killing me. I couldn't put my finger on that word. Thank you. The average person has less than 300 words in their vocabulary, so I try to stay above that, but it's hard to remember every word out there. But let's go ahead and take a closer look at this, because I don't want to just say, hey, there's no trade here without taking a close look, because that's really what this comes down to. Here's our current price. I'm going to be aiming at this box below here. Let's come down to our 4-hour. Thank you. I don't know what that word means, Ray, but thanks. Anti-disestablishmentarianism. Oh. That was that one was not on the spelling bee when I was a kid. It's been a long time since I won that spelling bee in, 1999. But this is our downstroke. Okay, we've tried to break out of it. Maybe this thing comes up, tries to test a slightly higher level. We're at a low right now. This is really an ugly situation, in my opinion, to try to buy this thing or sell it or do anything. Okay, so it's really kind of a guess. And I'm not into guessing. Okay, so what I would really want, I'm not going to do anything with this. I'm going to wait until we get a more decisive up move or a more decisive down move, because while we're at this low here, we may break out very soon, like today. Could come up like a rocket. It is a double bottom on the 4-hour. You're right about that. But the only thing about it not being it's not necessarily a double bottom until we get a true low. Okay, and we haven't really broken this little trend line here. Okay, so this is really what's telling me, like, hey, probably not a good idea to buy yet, because we haven't confirmed an up move. I would be looking for a 1-2-3 to happen here and get a little confirmation that we might be bullish. Okay, that's might be what I'm looking for, something like that. Okay, but we haven't done that, so we've really just got this little pennant that's happening right here. So I would really want to break out either one of those. So I could, if you wanted to do something like this, maybe set up a sell stop below this low here. That's up to you guys. You want an auto fib from that recent big low? You talking about this one? Yeah, we're sideways as hell in there. I mean, generally, it's telling me that, if you wanted to follow this blind, you could run it up to $25 maybe. If you want to take that kind of risk, that's what this looks like. My opinion, this is a guess, because I'm bearish on the dollar, so it's hard for me to. I'm bearish on the dollar, and I'm also bearish on silver. Yeah, we're right at the 5.0 level right now, Ray. So you're not wrong about that, but I'm just really not ready. And if I'm not ready, if I don't feel good about something, I don't trade it. But obviously, you guys maybe you guys know something I don't know. But this is if you're going to do something like that, a lot of people may protect their risk somewhere down here like this. Let's come down to our 2-hour time frame. If you are going to look to buy this thing, and it really wouldn't be a terrible time, because I am more bearish on the US dollar. We just paid off a bunch of people's student loans yesterday also. A couple of 5.3 billion, something like that. They're just looking for more places to spend money right now. And we may go and drop some bombs to try to take away some of the helicopters we left for the Taliban in Afghanistan. So, that might be more bearish for the USD than it might actually be bullish for silver. So, really, if you guys are into that narrative, if that sounds like something interesting to you, maybe you are. The risk reward's not terrible, even if you just kind of go like that, and you don't even aim out of this range. You just aim to the previous highs. Okay, so risk reward's pretty solid, even just like that. Okay, so not a massive move. I'm looking for a 75 penny move there. Okay, so not a huge move. Not a big risk either. So really, if there's any trade here, that's really what I think exists. But we are just a bit. We're getting close to the end of our time here today. So I do want to show. If you guys have one more, we can do one more. If you guys have one more you guys want to request, then I'll go ahead and show that one. Whoever puts it in first. Gold, oil. We haven't done oil in too long. Gold's going to be very similar to what we're looking at on silver. Let's check out oil, okay? Especially since we've spent so much time talking about the CAD, okay? So if you guys, and oil value is going to be very much tied to the value of the Canadian dollar, or vice versa, really. Depends on how you want to look at it. But here's our trend, okay, that broke towards the upside, and looks like we're coming back for a backside test. Okay, we did, you know, kind of test our high here. We didn't really do a good job of busting it. Okay, this is the most, oh, my bad. Wrong button. Okay, so this is really, you know, kind of a double top. So this thing could come down a lot more, but what I want to do, since this trend line broke, you know, this thing could be headed into this, you know, 50s range down here. Let's go ahead and get a Fibonacci going so you can see where we are in the waves. Okay, I don't really need a trend line on the bottom. I don't really see oil ever going below $0 again. Okay, so we hit our extension. If we pull another manual fib here on our new range, okay, we're almost to the 382, which is where I would want to stop being a seller. Okay, but where I would become a buyer is all the way actually down here, because I'm not going to do anything in the consolidation zone. Okay, this is where I would become a buyer, all the way down here at $51, $52, which I don't think would be a crazy price. And the reason I don't think that would be a crazy price is because they're closing down the world, and if people can't go outside and go to restaurants, they're not going to burn gas. Okay, and that's really important. So for the value of oil, that's why we ended at this. That's why this zero price is here, because they shut the economy down globally for the most part last year. So if they're shutting it down now, and they have been, and they're going to do it until, you know, believe whatever you want as far as the COVID thing goes, that has nothing to do with making money on this situation. It's really just about the lockdowns. It doesn't matter if you believe those are right or not either. It just matters if you know they're happening or not. Okay, because at the end of the day, that kind of thing is going to present a bigger trading opportunity and much more clarity in a situation than you're ever going to get afforded. Okay, I've been trading for a long time. Okay, there's never been so many clear-cut signals that an economy is going to do poorly or well. It's pretty easy to know if something's going to do poorly if it doesn't open for business. Okay, so you know that's something that as a trader is an advantage. And if you're trading this market right now, well, you should recognize the fact that the jerks that run this world are giving a gift to traders. Okay, because really that's what the people that run this world are. Okay, they want to take a lot of money and move it from one place over to another place, and they want to make money off of it. A lot, billions of dollars. Okay, that's how money flow works. Okay, so if I want to protect my risk here, maybe somewhere like that, make this line red. Okay, it may not be time to get in just as yet. Maybe right up here at this, you know, 65. So I think maybe we tap 65 up here. Then maybe we see a little bit more of a break. And, you know, this thing could come down. Short run, I think this 58 level, which is still, you know, a few dollars below where we are right now. Let's come to a lower time frame. Maybe we can whittle this thing down even more. Well, Ray, if you feel like they lost their money laundering center in Afghanistan, you may be right, you may be wrong. They may have just changed their strategy on how they launder the money. Just my opinion. That's really, I think, what we've been doing in Afghanistan for the last, actually not what I think, it's pretty much what's been going on for the last several years. And really it's terrifying what's happening there. They left a lot of people hanging out to dry. And, you know, it'd be very difficult not to be mad at the government for just abandoning, you know, thousands, like 10,000 people that are Americans, not to mention the Afghanis that helped translate for the last 20 years. So it's a very sad development that we've got going there right now. So not something that I'm happy to complain about, but it is something I might try to make money off of. Okay, so let's come down to our 2 hour. I'm not going to create these situations. I'm just going to, you know, take what the market gives me. That's really what trading is about. So I do think we come up. I think the 65 price is solid. I may not need to have my stop loss quite as high. You know, if I've got my smart resistance on here. Let's go. I've got 5 levels of resistance at 68 and under. Okay, so that may be where I look for a trade, something like that. I know this looks pretty noisy right now, so I'll remove some of this stuff. Okay, goodbye smart resistance. But really, we'd be looking to risk somewhere around $3.50 on this. Well, 3.5 oil dollars. So, yeah, our government stinks here, right? You don't have to rub it in. Really, frankly, I don't think any of them are that great these days. Just my opinion. For somebody that reads the news in the entire planet, you know, I miss 2019. I miss 2019 a lot, and my family and all sorts of other things that go along with it. You know, if I'm going to be inside and stuck, you know, I'm going to try to make money as much as I can, because it doesn't seem like the government wants to let me do that. But, you know, this is a place I can make money anytime, any place, anywhere. And all I have to do is follow the government's stupidity and give myself an advantage. Okay, that's really what this is about. Okay, and it's not really so much stupidity. It's totalitarianism. Okay, so if anybody hasn't seen that yet, then you're not looking. But the reality is, okay, we're really giving away a lot of our freedom to let the government decide what we do. And what that does for traders is it gives a lot more clear signal of what people are going to do and what they're going to spend their money on. Okay, so that's really the situation. Doesn't matter what you believe, that's what they're doing. Okay, so the government is making a lot of people's decisions they used to make for themselves. And usually, you know, the average person isn't telling everybody, at least not in an aggregate form, exactly what they're going to do. You know what, guys? Let's boycott spending money at restaurants. That hasn't happened for a very long time. But the government can make that decision for you, which makes, well, trading a little bit more easy to understand, in my opinion. But that's just my opinion. Doesn't matter what I think. Matters if I can manage my risk. But we're out of time here, folks. And if you like what we do in these sessions, then by all means, give a little Google search on this word 123Trade, hit enter. Give us a review. And we're working on getting more reviews. I think that most of these are probably pretty good. You know, I like to think we give a lot of information in these sessions. And really, if you want to help us out, this is really the easiest way for you to do it. I love doing these sessions with you guys. I hope that you guys learned something. If anybody wants this equity management calculator that I showed earlier, then by all means send an email to brokers@123trade.com. We've got a couple of questions here. I want to make sure. Need help on the VPS sync with MT4 and Smart Trader on my MacBook Pro. Have an account with AvaTrade but can't activate it, neither the demo or the live. Maurice, I'm not sure if you can get MT4 in an AvaTrade account on a MacBook, because I don't know if they have a Mac available version. But if you're looking for a solution, then I think I may have one for you. Just send an email to us, to brokers@123trade.com, and we should be able to help you out with that. South African government is imposing 12% of salary to government pension. That sounds interesting. It's just crazy how much of the world is destroying itself right now. I don't think anybody's really fully grasped exactly what's going on with that. But Maurice, if you can, just send an email to brokers@123trade. Send an email to us. I'll put that email in the chat box. But it's a scary time to have allergies, to say the least. Everybody thinks you're dying from the plague. You got a runny nose these days. Let's see. Brokers@123trade. I've had allergies my whole life, so, you know, a little bit of a runny nose. I don't know if you guys can hear that. But I'm going to the beach, because that's the best place to go for a runny nose. I don't really have a better way to put that, but really appreciate everybody coming here, spending the time today. There is a heck of a lot of movement happening. There's going to be more. Okay, I'm going to have a macro market update hopefully on Monday as well. But you guys, you know, if you can't be good, then be good at it this weekend. Happy trading, folks.